See? So morning, everyone. Today we're going to look at the legal form that is a SCIO. So this is the nuts and bolts of it. So that's why we do this trio of SCIO kind of workshops, because it breaks it down. So today is the structure, the kind of uniqueness of the structure, what you need to kind of think about when you're setting up the structure, and just about the charity test and all of the things, all the components to do with the SCIO. And on the 17th, we have trustees' roles and responsibilities. So that goes into the role of trustee and the role of the board. And then the last one is charity trading. It's the shortest, but it's the most infuriating one, but one that we should all be aware of so that you know what your limitations are with regard to charities and what they're allowed to do as by way of income generation. So it's useful to come to all three, but if you can't make all three, then we can certainly get the sessions across to you and you can watch it at your leisure, I guess. So I'm going to share my screen because I've got some slides to go over. So you'll get a copy of these as well. So they're, I tend to put everything on the slide so you can just kind of follow me as I'm talking. I do go off on a tangent sometimes, but we'll stick to the slides and we'll see how we get on. But like I said in the beginning, we won't be having a 3-hour session. But if you've got any questions, you can flag me down or pop it in the chat box, so that I can answer them as we go rather than wait until the end. So if everyone's happy to crack on, I will share my screen and we'll get going. So just bear with me. Okay. One wrong. Should really have this ready. Apologies, guys. Here we go. Death by PowerPoint, but it is useful. It's useful, especially when you're dealing with such dry topics as this. So SCIOs, what are we talking about? The first thing that everybody thinks about when you talk about what structure we're going to be is looking at the risk attached with what you're doing. Because as any entity is kind of, or any kind of proposed entity is moving forward with their kind of initial development, they need to look at the risk associated with the things that they do. And as with everything, this is going to be something that you're not doing in a personal capacity. It's an organizational capacity. So therefore, oh, I've got a chat clicking up already. Let me see. Can't see the slides. You can only see Windows Explorer. Okay. Right. Okay. Just give me a wee second. Thank you for that, Colin. I will just see if I can get that working now. Sure. See that now? Give me a thumbs up.
Yeah.
Excellent. Thank you very much. We don't want to do that. I want to go to slideshow. There we go. Right. As I was saying, you need to think about whether or not your organization needs to incorporate or not. And usually the triggers for incorporation are some of the more risky activities that you might be proposing to do within your organization. And this can apply to existing organizations that might be set up as a voluntary organization or a trust as well, or a charitable trust or a charitable organization that isn't incorporated. So these things still apply, and the triggers still apply to that, because you need to be able to minimize the risk that's attaching to what the activities and what it is that you're doing, because you aren't doing it in a personal capacity, you are doing it in an organizational one. So the triggers usually for incorporation would be if you're going to be employing staff, taking on finance, taking on grants even, taking on an asset. So those are kind of the big things that you might be doing. But as a general rule, as a risk assessed, kind of a risk averse person, I probably wouldn't join a board of an organization that wasn't incorporated, just because I wouldn't want to attach that risk to myself in a personal capacity. So that's why we do it. That's why we incorporate. It's to limit the liability. It's to minimize the risk, both to the organization, but also to the individuals concerned. Because the incorporated legal forms that we're looking at here, and the SCIO is one of those. So that's why I'm going back to this first before talking about the model, because it's useful to note before going into the kind of meat of what we're talking about today. What the incorporated legal forms do is provide a separate legal personality. And what that basically means is that the organization becomes a thing in its own right. So it's able to hold assets and able to be on the end of leases and contracts and that kind of thing. So it becomes this legal entity in its own right that's separate from the people who are running it. So that's why we do it. It's to minimize that risk that's attached with that. So a lot of people assume that if you're a charity, you're incorporated, but you're not on all occasions, because usually a charity status is an extra layer on top of another structure. So that is your trusts, your unincorporated association. So if you've got a constitution, but you don't have a company, you're more often than not, even if you're a charity, you're not incorporated. So that's why the SCIO exists. That's why these incorporated legal forms exist as well. It's all about protection and to ensure that succession as well, and that you continue to be there, because it formalizes your governance, it formalizes how you do things, because you're governed under whether it's charity law or company law, depending on what you're doing. But if you're looking at the SCIO, it will be charity law that you'll be doing that. But there's also a perception that's attached with it, being incorporated and looking at these kind of legal entities that are a bit more formal, in that it is a bit more credible and people might want to deal with you because they can see that it's a serious organization and that's what you want to do. So charitable status, it's a status, not a structure. But the SCIO came along in 2011, 2012, and that kind of changed that, because previous to the SCIO, so prior to 2011, you had a charity status on top of another structure, but the SCIO came along and changed that, it condensed that. So the structures that were previously had this charitable layer, where the unincorporated association, community benefit society, company limited by guarantee, and trust as well. So that is what we're talking about. And charitable status, it's the same test, it's the same thing that applies to SCIOs as any other organisation who are applying for charitable status. It's a legal form that's slightly different. So you must always meet the OSCAR requirements, and you must pass the charity test to be able to be a SCIO and to be able to add a charitable layer onto your kind of other structures as well. So you must have charitable purposes, and we're going to go into that in a bit more detail. You must have activities that further that purpose, and you also must generate public benefit. And the things that you charge for, you can't really have them at such a level that you can't, that people can't access. And, you know, so it's not unduly restrictive for them to do that. But charitable status as well says that, or charitable law says that you can't advance a political party either. And your property and assets must be used for charitable purpose. That is in there. So it's what I would refer to as the asset lock. But that is more of a social enterprise term. What we're talking about there is that you don't distribute your profit to the people who have set it up, but also that you will distribute your assets and property to another charitable organisation if you were to dissolve. So that is the two components of the asset law, and something that's fundamental to charity law and fundamental to the SCIOs as well. So, and the reason I'm covering this is so you can understand that the charitable layer and the charitable status and the SCIO are one and the same. So to be a SCIO, you need to know this stuff as to how to pass the charity test. So that's why I'm doing this, and then we'll go into the nuts and bolts in a wee minute. But charitable status, the reason that everybody goes for it is because it has lots of benefits. It's got more benefits than any other legal structure out there. So you register with OSCAR, and you pass the charity test, and therefore you're able to get generous tax exemptions. So you get exemptions on your corporation tax, on capital gains tax, you're able to get gifting and donations. You're also able to get rates relief as well. So there are lots of benefits, and it's the only structure that means that you get those benefits. So that's where everybody wants to be, but not everybody can be a charity for various reasons. And some people don't want to be a charity, even although that's where all the benefits are, but it's useful to kind of note what the kind of features of charitable status, and therefore the features of the SCIO as well. So your regulation is with OSCAR only as a SCIO. There is restrictions on what the trustees can benefit from, which is different to some of the other legal structures. Your activities must fall within the objects or the purposes of the organisation as well. And there's kind of exceptions to that, but as a general rule, that's what we're talking about. There's restrictions on the trading and certain campaigning that you can do as well. And that the reason for all of these kind of yeses and nos with charitable status is that you're more heavily regulated because you get all of the benefits. So it's kind of the yin and the yang with it. And that is something that you need to adhere to if you want to be a charity, if you want to be a SCIO. There's also legal duties for trustees, and these are the same legal duties whether you're a SCIO or another type of charity. So that is set out in law as well. So disadvantages of being a charity is that you have the regulation, you've got the added things that you need to kind of be thinking about by way of your accounting and duty and that kind of thing. So it is more heavily regulated than some of the others. The legal duties as well, although you say it's a disadvantage, it's not really, because the trustees need to know where they need, what lane they need to be in and what they need to kind of do to be the most appropriate trustee and within the law. So the legal duties aren't really a disadvantage, but it is something that everybody needs to be aware of, which is why we do another session just on that part. So restrictions on trustee benefits, that makes it sound like it's something dodgy. And what we're talking about is remuneration of trustees. So if you're a social entrepreneur and you want to set up a social enterprise, but you want to be paid from it, charitable status is a bit more restrictive in that capacity, but there's ways and means around it, but you need to be able to prove that it's in the best interest of the organisation to do that. But that makes it more of a disadvantage for a social enterprise setting up as a charity, rather than some of the other entities out there that are a bit more fluid and free with those things. So other restrictions would be, there's rules on trading, rules on fundraising, campaigning and political activity as well. So charitable status isn't for everybody, but it's about exploring your organisation and whether or not you're able to move forward with that. So the charity test, I've mentioned it a couple of times. What do I mean by that? You must have one or more charitable purposes to be able to move forward with your application. That can be called your aims, your objects, your objectives, whatever. And it's usually found within your governing document. So depending on what you are, if you're a SCIO, it'll be your constitution. If you're a company, it'll be within your articles. If you're a trust, it'll be within your trust deeds. But constitution is one of the kind of commonly used words that people use across the structures. So you must be advancing one of those purposes with what your activities are saying. So the purposes, it's usually about the why, and the reasons why the charity has been set up and what it aims to do. And the activities behind that further that purpose are usually the what. So the things that the charity will actually do to promote or advance those purposes and directly deliver the public benefit. So public benefit is enshrined in it as well, but I'm going to cover that in a wee second. These are the charitable purposes that are set out in charity law. So there's 16 of them. So they're wide ranging and you can basically cover at least one of those. What we used to see in the past was people would have a tendency to put as many as they could just in case. But what Oscar likes to do now is to assess you to make sure that you are indeed promoting and advancing that based on your activities and the public benefit that's arising from that. So it's about choosing which one is most applicable to you, and then illustrating what activity is behind that and what public benefit is arising from that as well. So public benefit is a huge part of the charity test, because you need to ensure that you are providing or intend to provide that public benefit in Scotland or elsewhere. You don't have to just be reserving your activity to Scotland to be eligible to be a charity. So none of the purposes can be presumed to be for public benefit. You have to kind of show that. So the benefit gained by the public must be compared with kind of the disbenefit incurred at the same time, or the benefit gained by the member of the body or any persons associated. So you look at, say, sport. Sport is a nice, easy one, usually, because the advancement of public participation in sport, it's about ensuring that most people get access to that sport, as many people as you can get. It's not about making good people better at the sport. So it's not about elite athletes. What it's about making sure that the most people get the access so that the most public participation can happen. And obviously benefits to sport, health, well-being, physical health, mental well-being. There's lots of different benefits that come from that. And that's all they're asking for. They're just looking for you to show how people benefit from the things that you do. And that has to outweigh any private benefit that arises from that as well. I'm going to cover private benefit in a second as well. Where benefit is only provided to a section of the public, is there any restrictive conditions that are attached to be able to obtain that benefit. And it's okay to have a distinct beneficiary. That's okay as well. There's no issue with that. It's just about looking at what you do and ensuring that you pass the test before going forward with that. And OSCR, the way they assess it when you put it through is they'll look at all of they break down the questions to be able to get to the nut of what you do and what you hope to achieve, and the public benefit arising from that as well. So public benefit. So is it a community as a whole? Is it a category of individuals? Is there maybe a category of beneficiary that's covered under the Equality Act as well? So you might have to justify why that is necessary too. So it's about breaking down your activities and the benefit you think that will come from that. But what I've found in 10 years of putting applications through to OSCR is that although the public benefit, when you look at it on their website, it looks fairly complicated, it is quite easy to satisfy, because it is just about outlining what benefits, how people benefit, how that advances the purposes, and detailing that, which is quite easy to do once you get your kind of business planning head on and do that kind of thing. But the other part of it is private benefit. So private benefit kind of again sounds a little shady. It isn't. It's just about if there's anybody that benefits as a natural result of the public benefit arising from that. So is there any members of the organisation who will receive any benefit over and above those available to the public? Or it could be, do any private individuals benefit from the charitable activities as well? And that could be as simple as you rent premises and the landlord benefits, but that's okay because you need premises to be able to deliver your activities. So it's about looking at the private versus public benefit and ensuring that you are demonstrating that the public far outweighs any private benefit arising, and that the private benefit is a necessary aspect, and it's coincidental to the delivery of the public benefit. The payment of trustees. And what I'm talking about here is remuneration of trustees for a certain service or for a job or something that they do, rather than payment for being a trustee, which is unlawful. So it could be that a CEO, or it could be that you've got someone on your board that you want to engage for certain services. It could be an accountant, it could be a legal advisor, it could be, anybody who maybe has the skills and experience that you need, and you can find it on your board rather than going out with the charity. And as long as you meet the terms of what the Act says on the remuneration of trustees, then you can do it, as long as the conflicts of interest is met and that you're justifying that it's a necessary part of being able to deliver on your activities. But each kind of organisation, some might absolutely go, no way, no how, we don't want to remunerate anybody on our board, it's a purely voluntary situation. And then there might be other ones who think, well, there could be a potential in the future. And then there's other organisations who have a clear person that they want to appoint in a certain role or remunerate for a certain service, and it's just about justifying why that's necessary. And it's not coming from the person who's been remunerated as well, because that's not seen to be a proper way of a board working, as someone saying, well, I demand a job out of this because I have founded it, or because I just want to get a job out of this. That isn't good enough for OSCR. You need to be able to show why be on the board, what skills and experience you have, how you can justify that private benefit being necessary, and then the management of conflict of interest and your quorum connected in with that. But if there's anybody who's concerned about any of that with their own organisation, there's definitely opportunity to have a chat about that, and chat about your particular circumstances around obtaining charitable status or going for a SCIO. And that, because this is more of a generic thing today, but it is just about exploring what's best for yours, because everyone will be different. So you'll be glad to know we're moving on to the actual SCIO now. And the reason that I covered that stuff is because a SCIO is a charity, so it's the same test that's applied. So it's useful to kind of intro that first before going into the SCIO. Because what a SCIO is at the end of the day is a legal form. It's the same charitable test, it's the same charitable registration, it's the same charitable regulation that's there. It's the legal form that's different. And people tend to treat it as if it's this different entity. And it is, because it's quite an unusual entity, but it's still got the same law underpinning it. So it's useful to kind of go into that charity test, charitable purpose, aims, objectives, all of that first, before going into the kind of the SCIO structure and what we're talking about here. So what is unusual about the SCIO, and I'll tell you what its real name is, because I say SCIO all the time because the full title is an absolute mouthful. It's the Scottish Charitable Incorporated Organisation, nice and snappy, but we call it a SCIO for short. And the basic kind of thing around the legal structure is that it's exclusive to Scottish charities. So you've got to have a principal office in Scotland to be able to be a SCIO. It doesn't mean that your activities are restricted to Scotland, but you must at least have a Scottish postcode for your registered office in that way. So what the SCIO does that's quite unusual, it combines the kind of legal form and the charitable status. So it combines the incorporated status and being a charity at the same time, which didn't exist before, because previous to the SCIO being introduced and being available for use, it was other entities that had to get charitable status. So you had dual regulation. If you wanted an incorporated legal form. So like I said, they came out in 2011 and they were quite novel and unusual, and people were really excited about it, and people are still excited about it because it's just a way of having this one regulation, but having the benefits of being a company, but without having to be one. So it's a nice little structure, and there's, you know, pros and cons like there is with anything, but, you know, it's a pretty good structure, you know, to think about if you want to be charitable, but you want the protection of incorporation as well. You need to have certain things within the Constitution that are set out in law. And there's loads of templates available out there. There's a Singletier and the Twotier templates available. I'll talk about what I mean by that in a wee short while. But this is the kind of the basics, and then I'm going to go into kind of more detailed information about the structure in a wee second. You must have at least 2 members to set one up, but that can be the same people as the trustees. So again, that depends on the Singletier or 2-tier structure. It's regulated as in the same way as other Scottish charities and other legal forms that are charities, just with a couple of exceptions to that, but it's mostly regulated in exactly the same way. It's the same law that applies to that. There's specific duties for SCIO members and charity trustees, and that again, the charity trustee duties are for any charity. It's exactly the same across the board, but there is something unique within the SCIO in that members have a legal duty as well. But again, this is the basics we're talking about. We'll go into the nitty-gritty in a second. Some parts of the Charity and Trustee Scotland Act do not apply to it, and removal of a SCIO from the Scottish Register enforces the dissolution of it as well. But again, these are just the highlights, the headlines for the SCIO, and we're going to go into in a wee second. So SCIO membership. Most of the legal structures out there have this thing called a membership. And what's really troublesome about that is that you might be a member of your gym or your library, but you don't have any governance role. But because of the structures that we don't have shareholders, obviously, because we are not for profit. Hate the term, but at least everybody knows what it means. What we're talking about is not for personal profit rather than not for profit, because that's misleading. But you need to have these decision makers within the structure. So if you've got the not-for-profit legal structures, you don't have shareholders. You can't have shareholders because there can't be any profit sharing that's happening. So what the structures have is this membership. So the members of a SCIO and the other legal forms as well, it's just about decision making and what decisions they make, as opposed to a difference from what the charity trustee decisions make as well. So a SCIO must have at least 2 members. So you need to name them. They can't be individuals, but they can also be charity trustees, but they need not be either. You might have an organisation that is a single tier that just operates on one level, and you might have one that's a 2-tier that has a separate membership. But again, I'm going to go into that in a bit more detail. Members have limited liability within this. So that means that there is no liability attaching to the role of the member and the decisions that you make as a result of that. The members are responsible for certain decisions, and therefore if they are ensuring that they're sticking to their legal duty, which is a duty of care towards the organisation, they will never have to put their hand in their pockets, obviously, which is why we have these limited liability vehicles, and this is why the SCIO exists. It's to ensure that no one has to put their hand in their own pocket for the operations of the organisation. So that's what we mean when we're talking about liability, and anything that's attaching in a personal capacity to the people who are making decisions within the organisation, and this separate legal personality that I mentioned in the beginning as well. So there's no liability. Members do not have to contribute in any way to the assets if it's to be wound up. So anyone who's familiar with companies and company limited by guarantee, there's members in there as well, but they have a token £1 liability, but the SCIO has taken that away because it is just a token. It just generally sits under law that members of the SCIO don't have to contribute anything. So that's important to note. There is a legal duty attached to the membership, in that there's a duty of care that is extended to the SCIO and the operation. So that basically just means, in a practical level, that members just have to make sure that they're putting the charity first. And that's it. There is a kind of distinction. What I tend to see in a lot of charities who have maybe been around a wee bit longer is that anyone would become a member. Anyone who came through the door would become a member. So there is a distinction between who uses your services, who participates in your activities, and the members. For some organisations, that will be one and the same. But what we're talking about here is ensuring that you note who your members are and note when they leave as well, because you need to keep a register of those members as well. And I'll talk about that in a bit more detail as well. But it's really important to know who your members are, because they're the ones that are called to AGM. Those are the ones that are called to make certain decisions about the organisation. So you really need to know who they are. So you might be a member-led organisation, and I know there's a couple of people from the carers organisation here. You may have a service user-led organisation where your carers, your current carers, might be members. However, that doesn't have to be if that's not the type of organisation that you are. But there could be community-led organisations. So say if you're taking on an asset, you would need to have a membership that's made up of people who are in your geographical area, and therefore it's community-led, community-controlled. So this membership is quite important. So that's why I kind of labour on about it a wee bit, because even though I've been doing this for 10 years and been talking about members that whole time, it still doesn't always sink in. So it's really important to know who your members are and keep a register of those as well. So membership is not transferable in the kind of usual way. So it's not like a share that can be sold and bought and whatever. So it's not transferable. You've got to have an AGM every year. In a SCIO, that makes it more unusual, because in the other legal forms, that requirement has been taken away under more current legislation. But in the SCIO, it still says that you have to have that AGM every year, and you must have them at least every 15 months. They can't be any later than that. And you need to have a 14-day notice period for those general meetings that are happening. So the general meetings, your AGM and EGM, that is your members' meetings, and that's what we're talking about here. So moving on to the other decision makers within the SCIO, it's your charity trustees. So that is your board, your committee, whatever you want to call yourselves. What we normally refer to as the board of trustees. And that's kind of the terminology that we use, but you can use whatever you want. But everybody who's on your board will be a charity trustee. So it's important that they note what their duties are in that regard. So that's what next week's about. And we go into full details about the duties and how you meet those duties. But just in a nutshell, it's about acting in the interest of the charity and putting the charity's interest before all else, and ensuring that the charity operates in a manner consistent with the purposes, due care and diligence, but also that you comply with the Act and any other relevant legislation that asks of something from you. And that duty of care towards the charity is also mirrored imaged with the members, as I just said. So your SCIO constitution, what must you have in there? So you've got to state what your name is, obviously. But you'd be surprised what people forget. Your charitable purposes, they'll normally be on page 1. If you're using the templates that are out there, and most of the versions that anyone will create for you will have those in the kind of first page. So your charitable purposes are detailed there. You have to make provisions for who can become a member, and how a person leaves the membership or was removed or withdraws in any way. You need to make provision for the appointment of trustees. So you need to have at least 3 in place to go forward with that, to go forward with the application. And you need to be able to show how they make decisions and how they become a trustee and how they remove themselves from being a trustee. But also you need to know how to remove a trustee if you need to as well. And that will all be contained within your constitution. You also have to state that you are limiting the use of the property. and advancement of the purposes as well. So that's the asset log thing that I talked about earlier too. So going into this is where people start glazing over a wee bit, because it's, but it's stuff that you do need to know, to be fair. So the SCIO constitution must also state any restrictions on the powers. It's not a good idea to restrict your powers, to be fair, but you have to have a paragraph in there that states what your powers are. Usually it's good just to have a catch-all. It just does the job and you don't need that. And then it also doesn't take up so much space. So any of you who have got current constitutions or older constitutions for another type of entity that's maybe been on the go for a wee while, they've got pages of powers, like 3 pages. There's just no need for that. So a catch-all says that you've got the power to carry out any activity that you want. That needs to be in there. So you've got the freest power to do what you need to do to advance your purposes. The SCIO constitution must also state that it's a SCIO. Again, these are obvious things, but you'd be amazed because that would get bounced straight away if it didn't have those components within it. So the way that it sits just now with Oscar, the application process is taking months and months for any charitable application. So what you don't want is to get bounced for mechanics, for things like that, because then it'll just add some time onto your already elongated process. Just to put it into a kind of context for you, they're only looking at my applications from January, February just now, just the basic look at it. So it's a real huge backlog just now. And part of the reason why some people are choosing some of the other models rather than going for the SCIO just now. But again, that's individual conversations that we can have if any of you want it. Your SCIO constitution must also talk about decision making. So the notice period for meetings, any kind of quorum, so how many people you need to be able to continue a meeting, any voting rights and resolutions that are passed. That is contained just like any other constitution. If there's a remuneration of trustee to be in there, the constitution has to allow it. So you put that within the content as well. And you also have to illustrate how you deal with any conflicts of interest too. And the other part of the asset log, which is about how surplus assets are used upon dissolution. And usually these are standard terms where you would say another charity or charities, similar purposes, would get your assets if you decided to withdraw from being a SCIO. So I talked about the 2-tier, single tier. So again, this is where people get a wee bit, but it's something that you need to know because you need to know who makes your decisions. And it's just useful to kind of note when you're about to draft your constitution or to get someone to draft it for you, because it's quite important. So within the model constitutions that are around, we talk about 2-tier and single tier, but really all that means is it's not a pros and cons kind of a situation. It is based on who's going to make decisions within your organization. So referencing the carers that are in the session today, but also community-led organizations, so people taking on an asset, as I mentioned earlier, you would more than likely, if not always, have a 2-tier. So you have a separate membership, but you have a smaller group of people who run it on the more kind of day-to-day operations of it, I guess. So it's, to put it into context, the charity trustees normally have responsibility for financial control, strategic kind of direction, but you wouldn't necessarily want your membership or the whole membership being involved in that kind of a detailed decision making, because there might be loads of them. So say if you're a community-led organization and you are benefiting, say, Fergusley Park, there might be quite a few postcodes that deal with that. So that might be hundreds of people. And if those people are eligible to be added as a member, there's no way you can make decisions with 100 people. So they sit as the members and they make decisions at member level. So that means they come to AGM and EGMs usually only. But from within that membership, you pick out people who can be charity trustees, and you would want your board of charity trustees to be made up specifically of, in the majority, people from the membership, because then that means you're truly member led, especially if it's a geographical area or if you're representing the interests of a particular group like the carers. So you need to ensure that you are truly member led in that way. But it's also good from a governance point of view to be able to appoint people from out with your membership. So you might want to co-opt as well. So that's what we're talking about 2-tier. Although I've got them side by side here in the diagram, it is more like a hierarchy. So the members are actually, they've got the ultimate control because they make decisions rarely, but they do make the most important decisions. So they make decisions such as to change the constitution, to wind up the organization, to remove a trustee. So the real power kind of sits with them. But what happens is, because there might be so many of them, or because they might not be involved in a more kind of regular capacity, they appoint a smaller group, being the trustees. But if you think of it like this hierarchy, the trustees would always be responsible back up to the membership, and that's why you have the AGM, so the members can still get a report on what's happening. And it's just about, basically the two-tier thing is about control, decision making, and there's 2 tiers of them. That's basically what we're talking about here. So some of you might be like, okay, yeah, I get it. Some of you might not. That's fine. You can ask me any questions that if you're not sure about. But it's about understanding what your organization needs, and if you need a 2-tier or if you need a single tier. And that will depend on what you're doing, if you need to be community controlled, community led, member led for whatever reason, or you can have it as a single tier, which I'm going to cover in a minute. So the reason the 2-tier model is used is usually because it is looked at as more democratic, because it's got 2 layers of decision making, and it's inclusive usually because the membership is not usually a closed membership. So you usually have an open membership, and that's why it can be more inclusive. The members have that ultimate control, as I've said. So it is that traditional model for the voluntary sector, because it could be a community centre, a single issue organisation, community groups with a geographical or a community of interest. And you can got that flexibility. You can get expertise on your board, as I said, that from the co-option of those trustees as well. So it's whether or not, it's not a, well, what are we going to do, pros and cons? What's the pros of having a 2-tier? It's not about that. It's about how you'll make decisions. And remember, it's not set in stone, because what you're talking about is a change of constitution. So if you started off as a single tier and moved to a 2-tier, or vice versa, it's a change to article. It's a change to the constitution, and therefore a members meeting would do it. So you can change either or if you find that it's not working, which a lot of people tend to do, especially later on once they've had a few AGMs and they realise, it's not working for them in either direction. So the single tier, it's one and the same. So when you think of it like this, so the membership consists of the charity trustees and the charity trustees alone. So it's a closed membership. And that just means it's more similar to, say, a charitable trust, where you just have one tier of decision making. Everybody is a charity trustee, but they're also a member as well. And all that means for them on a practical level is they will attend the AGMs in the usual way. They'll make their decisions with their member hat on. If they are doing any other strategic or financial decisions, they've got their trustee hat on. So it's just this one level. There's no additional membership. There's no need for, these open, large AGMs, unless you want them. It's just who has voting capacity that we're talking about here. And in a single tier, it is those same people, and they only invite people onto their board who they think have the skills and experience, and it's not a wider free-for-all out there. So that can be used by different organisations who feel that they can't identify a membership, don't need one, or just want to be quite effective with their decision making. So it's a self-appointed mechanism for who the trustees are and who the members are. So it can be useful for, the partnerships, can be useful for new starts, single, the kind of small organizations who are not quite sure how it's going to work yet, or it can be similar, suitable for the trusts that are converting over, because that just means that they've got the same level of decision making as they did within their previous structure. So forming a new SCIO, what do you need to do? It's an online application now, so that started a couple of years ago, which is great. So it means that you submit everything online. It must be 2 natural persons, so 2 human beings that apply. It used to be that you could have members who were organisations, and you can have that if that's what you need in your constitution. It's just they can't apply. It needs to be individual people that apply. It's a SCIO application form, so that is broken down into several kind of parts of the form. It asks you about your activities, who are your trustees, what you intend to do for trading, what any private benefit elements, what public benefits are arising. So it's a fairly comprehensive one, but if you've done your business planning or at least done some of your homework, it should be easy enough to draft. It's a service we offer as well. So just throwing that in there, just for fun. So the charity test is the same as for the other charities out there. There is additional technical checks on the constitution because they've got this legal parts that need to be in there. So a SCIO, the way that it works is you put a draft application in and a draft constitution and trustee forms for each potential trustee. So the SCIO, because of the nature of its legal form, it doesn't come into existence until you go through the OSCR process. So it's not born, if you like, until then. So your constitution remains in draft until such time as OSCR think that it passes the test and your application passes the test. And then on that day, and you don't know when that will be, that is when you're born. That is day one. So once the trustees and whoever is drafting the application, you need to be satisfied with that application when it goes in, because at any point in the application process, OSCR could give you the nod and they send you a letter to confirm your charity number and that you're added as a SCIO, and then that's day one for your organization. On that day one, once you get your charity number, you become an entity on that day. That means you get all the benefits of the limited liability on that day. So in the lead up to that, it's not that you're nothing, but you're nothing in the eyes of the law because you're just an applicant until that point that you are incorporated and it comes into being on that day. So if you're applying for SCIO status and it takes 6 months to get your SCIO status, you can't even set up your bank account because you don't exist yet. So it's that is proving a bit difficult for my applicants just now because they want to get going, they want to get the bank account set up, and even setting up the bank account just now is an absolute nightmare because a lot of the kind of bigger banks aren't taking new applications for corporate banking and trusts and things like that. So it is proving to be a bit of a nightmare, but that's the nature of the SCIO. Because you're regulated by OSCR and OSCR alone, you don't exist until that day. And once it's the same applies to the end of its life. If you are dissolved or are removed from the charity register for whatever reason, again, it's rare, but like non-compliance, or if you don't put in your accounts for years on end, you will be removed, and that means that you lose your incorporated status as well. So it's very much part and parcel of the way this legal form is. You don't exist until they say so, and you only remain in existence as a SCIO while you're charitable. And for most people, that's not an issue, but it's important to note because it's a certainly unusual part of this structure. So the property is vested in the individuals on trust for the charitable purposes, and it happens at the time of incorporation. It kind of everything will pass, and that's where this incorporated status happens on that day that they give you the nod. That's what we're talking about here. So when you're applying, so that includes, say, if you were applying from another entity, because any kind of charitable entity can apply for charitable status and become a SCIO and convert over. Everything remains within the previous organization until that day that you're incorporated, and then everything has to be transferred across because it's born on that day. So again, this is quite a mechanical conversation, but this is important for anyone who is moving to a SCIO from another entity, or especially because you might have assets already that you will want to transfer across. But we can talk about that on a separate occasion for those individuals who are in a current constitution, a current legal form that need to convert over. So the conversion to a SCIO can happen from an existing corporate body. So charitable companies and charitable mutual societies can convert over to a SCIO, which is fantastic. You can also convert over from an unincorporated charity. And you can also set up from scratch as well. So if you're an unincorporated group but you don't have charitable status, you can still apply for charitable status, but it's not a conversion, it's just a new incorporation. And there's a mechanism for each one to do that. But you usually get the SCIO in place first and then look to wind up your organization on the back of that as well. But there are considerations, legal consequences of doing that, and there are legal things that you need to think about. And usually the best option is to apply for the charitable status or SCIO first, so that the vehicle comes into being and that you can transfer assets to it, because it needs to exist first before you do anything else. Once you have got your SCIO status, you would have to, if you were an unincorporated charity or trust, you would then need to complete a consent application to wind up your old charity. And prior to the SCIO going in, you probably want to looking at your assets and liabilities and doing an exercise of kind of due diligence to make sure that there's no barriers to transfer assets across. And I'm going to talk about what legal considerations in a wee second. So Oscar, what they'll do is they will consent to your winding up and transferring your property and assets over to the SCIO. So for a little minute or two, there's technically 2 charities on the register, but the names can't be identical. So, but just adding SCIO in kind of negates that kind of little weird situation where you've got 2 charities on the register at one time. So I don't know if it applies to any of you, but if anybody wants to chat about the mechanics of it at the end, we can do that. I know there's a couple of you I'm going to see anyway about this, so don't you worry, you'll get the one-to-ones with me at the appropriate times. Legal considerations. This is the pain, because if you're already an entity, if you're already unincorporated and have a constitution and have a bank account and have assets, whether you are or aren't a charity already, there will be legal considerations to moving over to a SCIO. You will need to look at what property you have, and every bit of property and asset and liability needs to be transferred to this new SCIO once it exists. So leases have to be reassigned, bank accounts need to be closed and opened, 2Pay would apply to any staff, pensions need to be transferred. If you're a care inspectorate registered, that warrants a new registration. Same with HMRC. It's, it can be a bit of a logistical nightmare, but the reason that people do it, if you're unincorporated, there is too much liability there for you. So the SCIO really is the best option for you to move across. And it's just short-term pain for longer-term liability minimization. So it is worth doing. Any of you who are in the group today who are already a charitable company, it's slightly different for you, and that would be the corporate conversion. So that exists to your charitable company. So if you're a company linked by guarantee with charitable status, and charitable mutual societies as well. So if you have only a single member, then you can't go to a SCIO. You would have to add a member to be able to go. And if you've got a share capital, which would be very unlikely, you can't go across if you not have your fully paid up share capital. But that is very rare, but it's worth noting. You never know, there's weird and wonderful structures out there. But the corporate conversions is slightly different because you complete an application to kind of move over to the SCIO, and you have to pass your resolutions to agree to go across, and that is usually a member's decision as well. The special resolution that's passed at your general meeting would, make sure that you're able to go across to the SCIO from that. The good thing about moving from a charitable company or a charitable mutual to a SCIO is that you don't need to do the same transfer of assets as you would do if you're an unincorporated charity, because it's the liability, the limitation of liability, the structures are so similar, you don't necessarily need to do that. Although an exercise of due diligence is still, quite a good idea to do anyway, just so you get your ducks in a row for that. When you're converting from a charitable mutual or company over to a SCIO, you've got other regulators that you need to satisfy, and that would be Companies House and the FCA, and there's things that you need to do to satisfy them. It's very rare that you do get a rejection from any of those, but if you're not up to date with some of your submissions, you might get rejected from your existing regulator, or if you don't pass the test. Still, even though you might be a charitable company, you must always ensure that you're passing the charity test in the future, so you may be refused from that point of view. But again, that's very rare, but it's important to keep a note of those kind of things. So there are reasons why you get rejected, but if you're in liquidation, or if you're overdue, or any of the kind of things that are applicable on the slide there. So you will get these slides across to you. So I'm not going to go into detail because that's like real mechanical stuff that probably doesn't apply to all of you, but again, conversations can be had. If anybody needs them, if anybody's a charitable company, it needs to kind of talk about that. But it just outlines the process, these slides, so that you know what's in front of you. And most of it is between regulators, so you don't have to worry about it too much. But it's just about that automatic transfer of property over from old to new. The reason that anybody would go from a charitable company to a SCIO would be the dual regulation thing. If an organisation is finding that reporting to Companies House and OSCAR is a bit of a pain, then they can move across. But it is a fairly long, drawn out process to apply for the SCIO conversion, just like any other. So it just takes careful consideration. And what would the benefit be? Would it reduce your costs by way of accounting? Do you find the Companies House part really kind of annoying? If you do, then that could be triggers for you to think about SCIO as well. But just because the SCIO's there doesn't mean that you need to take it. So it's about exploring with your own organisation as to whether or not that is right for you. I mean, I've had a couple in your area recently that they are charitable companies, and they were looking at, you know, kind of their governance and deciding whether or not a SCIO was right for them. And both of them decided not to move. And instead look at their existing governing document and tidying up some of that instead, because they didn't feel that for them the two sets of reporting was any bother, especially because the charitable regulation and accounting is more onerous than the Companies House part. So for them, it didn't mean, you know, much difference to them, so they were quite happy to stay with the dual regulation. But it is useful to always look at these things as a kind of good governance exercise. So your registers, you must keep registers of your charity trustees and update any changes to that within 28 days of being notified of it. You need to keep details of your charity trustees for up to 6 years. And for the sake of transparency, if anybody asks for a register, for a copy of your register, you should really be giving it to them. And yes, there's GDPR considerations with that, but again, you can weigh up what needs to be done as a result of that request. To be honest, it hardly ever happens. Sometimes you get it. I mean, I've had it with a group I'm working with in another part of Scotland just now, and they've been asked for a copy of their register, just because they weren't very happy that they weren't on the board of this new organisation and just wanted to kick up a stink. But I'm not saying that that would happen here at all, but it is something that is a legal requirement, and for the sake of that transparency. And in your duty as trustee, you have to weigh up the different legislative provisions that you need to be, you know, aware of, you know, health and safety, GDPR, you know, all of those things, that kind of tax law, all of these things that you need to think about and weigh up what you need to do to be able to satisfy both charity law and GDPR. But again, if anyone's worried about that, I can help out with that, because there are, you know, GDPR isn't just about keeping everything to yourself, it's about having a legitimate reason to be able to release some of that data that you are holding. So any trustees that are appointed by OSCAR, that's a very rare occurrence, but there's provisions, this is what the law says, so that's what I have to tell you too. So that is, you need to keep that. So there is a bit of an administrative burden to that. So you need to have someone who is keeping that register up to date at all times. So if you've got a high turnover of trustees, you know, that can cause issues because you need to keep this trustee register up to date. But to be fair, there's just a question there. Most of the other entities have that same requirement. Right, so Jules, you've asked a question. When sharing trustee register with a member of the public, how much or little detail must it include? E.g., can it only be names, or must it include certain contact details? So I would suggest that there would have to be some things that you redact, you know, for that purpose. So yeah, names potentially, yeah, because if you're already a charity, or if you're looking at anyone on the charity register, OSCAR submit or publicise the accounts, but what they do is they redact out the names of the trustees on that, just, you know, for the same purpose. But if anybody asks for the register of your trustee, you would need to have a legitimate reason under GDPR to be able to release that information, and it isn't always pinned on consent either. Everyone thinks GDPR is all about consent and everyone has to consent to every single little thing. There's lots of other exemptions under GDPR to be able to release information. So you would need to balance up what needs to be shown. So names would probably be okay, but you might not want to include, you know, addresses and their full information, because you get quite a lot of information from them as a trustee. You know, the trustee form itself asks for names, addresses, date of birth, previous trusteeships. that kind of thing, or current trusteeship. So it asks for a lot. So yeah, redacting out what you don't feel is appropriate or necessary. But again, the trustees understanding that their details may be used for that purpose and applying the applicable GDPR exemption for that. So again, it's a very rare thing. But you do get the odd troublemaker that does do that. So if anybody wants to chat about that, we can look into that, and we can ensure that you're GDPR compliant around that as well. So as well as your charity trustee register, yeah, this is the details. Sorry, Jill. I keep forgetting what's in front of me in the next slide. So the natural person. So if it's an individual, name and address, date of appointment, any offices held. So even although you might get information from them, this is all that you legally need to keep on the register. So you can decide what to redact and what to not redact when you're giving it to the public if they ask for it. And it's got to be a reasonable request as well as to release that information as well. So if it's a corporate body, you say who they are, what their registration numbers. For former trustees, you need to keep that for 6 years. So even although a charity trustee might have resigned, you still need to keep that, you need to state that they're a former trustee and when they, terminated their appointment. And the reason for that is just because you might have resigned doesn't mean that you're not responsible for the decisions that you made when you are. So that's why you keep it for the 6 years in case anything comes back later on, and you're able to keep a good note of who was making that decision. So as I was saying earlier, the liability that you have as a trustee and as a member is all hinged on your duties. So although there's limited liability for the people making the decisions, if you don't adhere to one of your legal duties, you could be personally liable for it. And that's the same with any of the entities. Again, this is rare in occurrence, but it's the whole carrot and stick of being a trustee, knowing what your responsibilities are, knowing what your legal duty is, and adhering to that in the best possible kind of way that you can. And that is always boils down to good faith and making decisions based on the information that you have at that time. So even if you make decisions that are incorrect or have a consequence, it doesn't mean that you're suddenly going to be personally liable for that. What it means is that you have made that decision in good faith, taking the advice that you can. So no one expects you to be perfect at it. All it does is just ensure that you do act in good faith and that you will continue to make decisions based on that. But that's what next week is about, or the 17th is about, is going into detail about this legal duty and what your role and responsibility is in that regard. So any member of the public may make a request if they want to. The request itself must be reasonable, or not the motivation. So even if it is about causing trouble, then that isn't in itself a reason to refuse it. So this request itself must be reasonable to release it. And the SCIO may remove addresses if the requester is not a charity trustee. The SCIO may also remove the names, but only if it is a safety consideration. And you may think that releasing that would jeopardise them in some way. SCIO is not allowed to charge for providing a copy, and you must comply with a request within 28 days as well. So that is set out in law, so you don't have a choice about this. And that is there, and it's all about the transparency of being a charity. So in itself, people can be quite uncomfortable about that, because I've got lots of clients who don't even want their personal address as a registered office, so people have a right to privacy as well. So it's worth noting to charity trustees that this information is being recorded and that it may be requested, so that people have the full picture as to what they're signing up to, I guess. So the register of members, that exists as well. More so if you've got a register, two-tier, where you've got a separate membership to your trustees, and that that if they're not identical, then you keep 2 registers. If they are identical, the people on both, you just keep 1, obviously, because it would be silly to do 2. So again, the 28 days applies, and 6 years of the former members has to be kept as well. So the name and address or date of registration. The reason you need to keep this is so you know who you're making decisions, especially with your membership. So to reference the carers again, sorry ladies, I have a carers organisation that I'm doing work for just now. It's not in Renfrewshire. It's in another part of the world. And they are a carer organisation in a similar way, but they would just naturally, over the years, they've been on the go for ages, they're really successful. And they have, at the moment, 14,500 members. You think, just have a think about the logistics of that, of calling an AGM, of having a register of those people. Because what they did was anyone who used the service, access to the services, or were a carer, regardless whether they're a former carer or a current carer, everybody was added, everyone who walked through the door. So that means that now we're having to try and condense that and try and do that. So that's obviously a very extreme example of it. However, you know, the admin burden, I guess, of keeping your registers, that's why you need to know who your members are, because even the burden of keeping those registers alive and moving as you should can be troublesome. But you know, noting who your members are. So that's why I went into so much detail about the members versus the trustees, so that you know exactly what's in front of you if you are going to look at a SCIO, or even some of the other models, or even if you're an existing organisation and you don't have a register of your members, you might have to think about it and think about who you invite to AGM and who makes decisions. Not just because you might have an open AGM where you invite anyone in, you know, in the community, but it doesn't mean they've got voting rights. So even if you don't have a view of who your members are, you can easily reconstitute that and no one's going to punish you for it. But anyway, that's just a wee side. I told you I divert from the point often. So corporate bodies, if you've got an organisation that's a member, you need to keep their name and any registration numbers associated with them as well. So again, former members when they cease to be a member as well. Same applies to anyone asking for a copy. No charges, 28 days, you can redact information on there as well for protection. So references to SCIO status. If you become a SCIO, you must shout to the world that you are a SCIO. So you must have references within your documents or within your paperwork that you are a SCIO. You don't have to have SCIO in your name, but you should always state on your website, on your invoices, whatever it is, that you're a SCIO, in your email signatures, that kind of thing. And that you should always display your Scottish Charity number as well. And that helps people identify you as a charity. So the end of life of a SCIO. Once a SCIO, always a SCIO, basically. Because if you think about animals, I know this is a bit off the wall, but a SCIO and a SCIO go together. Nothing else kind of fits in with that. So a SCIO, once you become a SCIO, you can't be anything else. There's no conversion to any other legal form. There's no transition to anything else. You can only dissolve it, either solvent or insolvent, or you can amalgamate with another SCIO. You can't amalgamate with another type of charity, only a SCIO, SCIO and SCIO, animal. And you can also transfer your SCIO's undertakings, which just means that you transfer your assets to another SCIO as well. So you know, there's different options, but that is what happens at the end of life. So if you cease to be charitable, you cease to exist as an entity. But these are the options available. So if you're thinking that your SCIO needs to wind up, you figure out whether or not it is solvent or not, and that will determine your process to end it. Or if you're looking at merging, amalgamating with another organisation, it should be a SCIO before you can go through the steps. So usually when you're looking at an amalgamation, you look at 2 or more existing ones that make that application to amalgamate. And then usually a new SCIO is created as a result of that. So there's a question in the chat box. Does that mean we can't transfer our assets to a non-SCIO? Right. So if you're talking about your particular organisation, it's you're converting. So that's different. We're talking about the end of the life of an organisation here. So there's a difference between the conversion and when you're ending the SCIO itself. What do you mean by EOL? Oh, for an end of life, sorry. Sorry, Colin. Yeah, that means that you can't transfer your assets to a non-SCIO. If you're talking about the end of life of a SCIO, you can't transfer. You can, the transfer of undertaking that I talked about here has its own process. So I'm going to cover that in just a wee second. So just give me a wee minute and I'll get to that. Okay. Yeah, so amalgamation. 2 or more existing SCIOs may make an application to amalgamate, and the result will create a new SCIO to be entered into the register. So that's the amalgamation that we're talking about here. So SCIOs may not amalgamate with a body that's not a SCIO, even if it is a charity, as I've said, or amalgamate to create a charity that isn't a SCIO. So it's just the nature of the beast, it's the nature of the entity, which means that the SCIO to SCIO has to stay in place. So the next part is the transfer of undertaking. So the transferor SCIO no longer wishes to continue, but does not want its activities to cease. So this applies to the transfer of all the properties, rights and liabilities, and not a partial transfer. So it's got to be the whole shebang. Recipient body must also be a SCIO, and it's the transferee SCIO, and it results in one SCIO being wound up, but not a new one comes into existence. So it's more like a merger than an amalgamation. So it means that one goes into the other, but again, it's SCIO to SCIO. It doesn't apply to other types of organization. So there's not a new SCIO, one goes into the other basically. So it's a transfer of undertaking. I don't know why they just don't call it a merger, but this is what they call it under law. But that's basically what we're talking about. We're talking about 2 that merge into one. And that's how you do that. And again, there is a step process with Oscar that you need to apply for this. It differs slightly from a wind up, which only involves that transfer of surplus assets. So we're talking about everything being transferred over from one SCIO to another under this transfer of undertakings, or a merger, if you like. So dissolution. If you want to dissolve your SCIO, you need to figure out whether or not it is solvent or not. In the usual way, there's no special rules for that. Obviously getting advice on that is a really, really good idea. If you're solvent, it's a decision of the members, you apply to wind it up, jobs are good and easy-ish, and you deal with the assets, accordingly in the usual way. If it's insolvent, then that makes the process more complicated, as it usually does. So it's a SCIO-led dissolution or a creditor-led sequestration. So in all cases, the Oscar dissolves the SCIO by removing it, not the SCIO itself, when it's insolvent, or in all cases, sorry. So the thing about the SCIO is that the reason that everybody wants it is because it's a one-stop shop. It is charitable, it's incorporated, it's just got one legal form, it's got one regulator and one regulator only. So that's why everybody wants to go to it. So it's got this convenience, if you like, of having that legal personality, but also that it has that permanent succession within it as well, and that protection. That's the most important part. The reason that a lot of organizations want to go is they want to limit their liability, especially if they're unincorporated currently, and they want to kind of have the same sort of regulation, but at the same time protect themselves and not have to put their hand in their pocket, which is entirely understandable. If you are looking at a SCIO versus a charitable company, the single regulation side of things, it's simpler and less prescriptive, in that you don't have to deal with the 2 sets of regulatory regimes where people want things at different times. So Companies House, they need a certain notification of when you make a decision within 15 days, but Oscar, it's 3 months. So it's getting to grips with all of that. And some charities just don't want the hassle of it. The charity regulation has the most onerous accounting processes though, because that's where the SORP is. That's where you need to see what a charity is doing, because it is more of a transparent thing and it's more public facing. But over charitable companies, you are talking about that simpler, and Oscar's a really good regulator as well. You can ask them anything you want and they'll always answer you, and they give you a lot of leeway. They don't charge you fines if you're late for your submissions or anything like that. They will always want you to remain on the register. Companies House, they kind of stand off, they don't tend to, standoffish. They don't tend to involve themselves too greatly with what you're doing unless you're late with something. Then you'll get a fine. But, they tend to kind of stay away from you the rest of the time. They kind of give you the opportunity in good faith to run the company as you see fit. And Oscar are similar as well, but Oscar, I think, are slightly more approachable in a lot of ways. So over the maintenance costs of having a charitable company can sometimes be a bit more, because you're having to satisfy the accounts for both. So again, if you're looking at your decision making as to whether or not to go to a SCIO from a charitable company, it'd be worth looking at the costs associated with your accounting and speaking to whoever does your books in that way. Disadvantages. So if you compare with unincorporated charities, there is additional duties for your trustees and your members. The constitution is probably going to be a wee bit more robust and a wee bit more legalese than you were currently used to. Over charitable companies, it's, you know, it's less well recognized in a way. I mean, people are much more aware of the structure now, so it's not so unrecognizable as it once was a few years ago, but there is still lots of kind of uncertainties about it, as with any newer entity, because the SCIO is the newest one on the block. So, you know, time will tell. You know, especially if you're dealing with overseas or anyone, you know, in other jurisdictions, they might not necessarily understand what a SCIO is. And there are some people who know that that they're dealing with a SCIO, but they look for them on Companies House. So previously, the SCIOs wouldn't appear on Companies House, but now they do. All it says is that they're a registered charity and that, you know, you need to go to OSCR to view their content. So that changed over the years as well in the last few years. And generally speaking, the disadvantages of a SCIO is that, you know, there isn't any flexibility for the end of its life, and, you know, for merging and for amalgamating and that kind of thing. And the whole once a SCIO, always a SCIO, and your dissolution means that you cease to be an entity. Again, some people might not like that, the inflexibility of that. And the recognition out with Scotland, I guess, as well. Although, you know, in England now they've got a CIO, so they're just dropping the S from it, so it's a similar entity. So again, when you're looking at any advantages, disadvantages, they really just depend on what you're wanting to do. So it's all very well talking about the generic side of things. So I always welcome a chat with anyone on a kind of individual kind of basis about what's best for them, what they're wanting to do, what they're planning to do, if there's any drawbacks to that, or, you know, what's the right entity. And the kind of secret with entities is there's no perfect one. They all have their, you know, they all have their issues, and they all have things that you might not like about it, but it's just about getting familiar with that. Yes, Maureen, they will be. The next session is all about the role and responsibility of trustees. So it talks about the duties, all of them. It talks about everything to do with SCIOs and just trustees as a whole. So that will be covered. So thank you for your question. And that, are we nearly done? We might be nearly done. So the OSCR application, you need to have your constitution prepared and ready, and you'd be happy with it, because as soon as OSCR give the nod, it comes into being, it comes into force. So any changes that have to be made are more complicated after that SCIO registration number is through. The online application form, you know, you put everything in the kitchen sink in there, so you can ensure that they are assessing you fully based on what you're planning on doing. Trustee declaration form, so that has to be signed by each prospective trustee who wants to be on the board, and any supporting documents can be really useful for OSCR. So that could be business plans, funding, you know, applications, that kind of thing. So it's really important to have everything ready and to not just put something in for the sake of it. And just be ready for that application. So any questions from the floor? Anyone want to talk to me? Someone talk to me. Silence. I know that, you know, the thing about these workshops is because it's not applicable to your group, you can only talk in a generic sense. So it's dry, it's not interesting. I can't make it interesting, even with the accent. It's just Cheryl. I'm looking at you. So you just can't make it interesting, and it's really difficult to do. But it is really important to know all the nuts and bolts of the structure. But if there's anybody, because I know I'm speaking to a couple of you soon, Rainbow Turtle and the carers, I will be speaking to you in the next kind of couple of weeks, both of you, so we can you know, kind of explore that. And to answer that question that just popped in, let me see. Yes, absolutely, Jill. So that can be something that we do for you. There isn't, you know, although we're a social enterprise and we do charge for things, the initial consultation is always free. So within that consultation, you don't actually have to use our services at the end of it. But what I try and do is give you as much as you possibly need to be able to make your own decision, and then you know what to do next. So you can look at the review, you can review your organisation, look at, you know, if there's anything bothering you within your constitution or the structure itself with the regulation, and decide if that's necessary. But normally the first step is to look at your governing document, look at what it says, look at anything that's annoying you in it. So it could be about AGMs, it could be about members, it could be about, you know, all of those kind of things. And then you decide whether or not the structure is fit for purpose, what options are available to you, and what the mechanics are to get from one to the other. And thank you, Jules. So I helped Kairos with their application. I mean, to be honest, you guys did all the hard work. I just had a look at it. So you guys did a real full and good account of what you were planning on doing, and it went straight through, which was really, really good.
It was astonishingly fast.
Yeah, it was really, really quick. And, you know, I'm quite conservative when I say to people about the time scales with Oscar, but yours was probably the only one that I've had more recently that just went straight through. So, you know, having that robust application is really, really useful. So there is, yes, the slides will be sent across, and from iPad. Hello, iPad. Yeah, and there's kind of notes in the bottom as well, so to have a look at those as well. So, you know, I put as much information as I can so that everybody can just take what they need from it. But Oscar's website alone is quite good, but their SCIO document that goes into all of this is so long. There's not many people who would really want to do that. And I know, I appreciate my session isn't all that better, but still, you know, it's one of those things. The legal structure is never exciting, no matter what. It's just a necessary evil and a necessary thing that you need to think about so that you can make the right decisions and review what you've got, and see if moving to a SCIO is the best option. So if you're unincorporated or a charitable trust, a SCIO is a really good option. If you're already incorporated, then it might be just need a bit of a further consideration and review as to whether or not that conversion is necessary, whether you want to go through it, or, you know, whether the regulation is really as annoying as you think it is compared to the process to get there. But certainly from a liability point of view, it's always a good idea to review the SCIO as a feasible option for you. So any points to note? Anybody want to share anything or ask anything while you have? Yes, Maureen.
Just, I wasn't sure about the 14 days notice for meetings.
Yeah.
Is that only for the AGMs? It's not for normal board meetings?
No, that's just for GMs. I just sprayed my juice everywhere, apologies. That's going to look really good on the recording. Yes, that 14 days notice is for your AGMs. So any notice that goes out depends on the kind of the width of your membership, I guess. So when, you know, I referred to my carers organisation that's on my books that has 14,000, they've got to do a mail shot. They do letters for in the main, but they obviously put stuff on their website and they advertise it around their premises and that kind of thing. But you've got to be able to ensure that you know who your members are and that they know that the meeting's happening, so they have the best opportunity to come and vote, basically. So if you've got a huge membership, that can be quite an onerous thing. So the 14 days is the minimum. If you want to give more notice because of those challenges, then you can do that. But 14 days is kind of standard. It's the same in company law as well, although some constitutions might say 21 or 28, and you can stick with that. It's just 14 is the minimum. So if you're having a certain decision being made at an EGM, it can be good that the paperwork should go out first. So if there's a resolution to change a constitution, that should go out, or at least give people access to it. Any resolutions or decisions being made, but also the kind of agenda or thereabouts, if there's anything that needs to, you know, the members need to know in advance. Because what isn't a good idea, and what I've seen near fisticuffs with in the past at various AGMs, is that the members weren't notified of what they were deciding on, especially if that is quite a big governance decision, like a change to a constitution or a change to a legal form. And if they're not notified in advance, then that, you know, causes problems. So that's what that 14 days is about. So yeah, minimum, but you can use a longer term if you want. Anyone else? No? All good? I'm going to stop recording.